Hello, everybody. Welcome to our Work of Design Live webinar. We are here with Maree, and I'm going to let a few people kind of keep jumping in here while we're waiting for that. It's spooky Halloween, so I don't know if you want to share if you get lots of trick-or-treaters. What's that number? Are you dressing up? Are you big into Halloween? Is your house just fully decked out, or tell me it all. I'm a big Halloween fan, so I want to hear from you guys. And also maybe where you're from. Is it big Halloween? Are you in a big Halloween town?
I personally
Yeah, lots of
yeah,
Halloween.
yeah. So
Awesome.
I haven't put together my costume. I'll be doing that tomorrow. I want to get through this webinar first.
Absolutely. Yeah, me and my husband are doing a little bit of like a Renaissance theme this year. He's originally from Nottingham, England, so I'm dressing him up as Robin Hood
Uh,
this year.
Fun. Oh, fun.
Yeah,
I think we're
so
gonna
good.
do Frankenstein and the Bride of Frankenstein.
Ooh,
Our,
that's
our
fun
take on that.
too.
Yeah,
I love that.
yeah,
Um, so we'll just give it maybe one more minute just to let everyone jump in.
yeah.
Oh, Diane Keaton, I love that because it's a tribute. She was an icon. Yeah, absolutely. New York City. That's nice. All right. Let's get this rolling. So, hello and welcome, everybody. Thank you for joining us for today's Work of Design Live webinar presented by Studio Designer. If you are new to our webinar series, Studio Designer is the leading platform for interior design businesses, helping designers manage projects, finances, and client relationships all in one place. We're here to make the business of design side easier so you can focus on doing what you love, which is creating beautiful spaces. And our Work of Design Live series brings you expert insights, real world strategies, and inspiring conversations to help you grow and thrive in the business of design. I'm Helena Stevens, part of the Studio Designer team, and today we're excited to welcome Marie Leonio, founder of Mareevuitton. Maree helps interior designers and creative business owners take control of their numbers with confidence. A certified accountant and studio designer expert, she combines more than 20 years of financial experience with a practical, approachable teaching style. Through her YouTube channel, mentorship programs, and one-on-one training, Maree turns complex financial workflows into clear, repeatable systems that strengthen profit and improve cash flow. Today's session, Preparing for Your Year-End in Q4, Your Closeout Guide, is a practical look at what it takes to finish the year strong. We'll dive into subledger cleanup, profit leaks, and key steps to prepare your books before year end. You'll walk away with a short checklist to close 2025 correctly and a focused plan to grow profits in 2026. As always, we'll have a Q&A session at the end, so please feel free to drop your questions into the Q&A box at any time during the presentation. And don't worry if you need to step away, this session is being recorded and will be sent to all registrants afterwards. We're thrilled to have Maree with us today, so let's dive in. Maree, over to you.
Thank you. Thank you. I'm going to actually share my screen. Um, Wait,
We had it working. We know
hold
it
on,
works.
hang on.
Yeah.
Here we go. Okay.
There we
Can you
go.
see my screen?
We can see your screen. Yes.
Awesome. Okay. Thank you, Helena. Welcome, everybody. I know some of you are returning from market. Others are deep in projects and trying to wrap things up before the holidays. So I really appreciate you taking the time out of your busy schedules to be here with us today. My goal today is that at the end of the session, you'll have a clear understanding of what it takes to close out the year for 2025, because I'm actually going to close out 2024 in my sample company. And this applies not only to studio designer users, but to interior designers working on other platforms, or really just anybody managing business or personal finance. Okay. The checklists included in the handouts are going to be on screen as well. So if anybody wants to screenshot them there, you can do that. But you will have, if you don't have one already, a handout. Okay. So it's designed to give you the confidence and specific steps you need to close your books and just start 2026 strong. Gosh, it's crazy to say 2026, but let's get started by looking at how your regular month end process sets the tone for an easy year end. Okay. I always say month end before year end because you should be doing this already. Okay. I mean, everything you do on a regular monthly process directly impacts how smooth the year end is going to go. Year end is not a separate event just for your December month end, but it is just a few little extra steps that ties out the year and make sure you're ready for tax. Okay. So if you're staying up on reconciliations, billing reports, year end is just another checkpoint. Okay. It's not scramble time. Okay. So I broke it out in this format, right? You alter it based on your specific tasks and your company, but I broke it up in a way that is the order that I'd prefer to do it, because the first thing on the list you'll see is invoicing clients. I call that in Studio Designer, money in, right? Money in is everything that we need to do to bring in the revenue. That means, billing the clients, so, doing the contracts, collecting the retainer. So things that bring in the money, because the rest of this can't be done without the money coming in, right? So then once we've kind of invoiced our clients for the prior month, we're going back in and doing the bank, credit card, and loan reconciliations. Okay. If you're the accountant, you're sometimes or oftentimes just accounting for funds that have already been spent, after the fact. So check runs aren't always going to be possible, but basically this is what I call, paying out, accounting for the expenses. So the money out stuff. Okay. And this mid-month maintenance is kind of where you go back in. So now that you've done your bank recs over here, you can now get ready. It's fresh in your mind. Who's paid, what we've spent. Now would be a good time to send out client statements for anybody that still has a balance, this time in the month. I kind of give them, hey, here's a lot here. Here's open balances before late fees or whatever applicable per your contract. Okay. So I make sure to kind of get those out. You run payroll if applicable. That's not going to apply to everybody, but sales tax is, right? So that's also a good time because again, what's been invoiced. You kind of have a good idea and it's fresh. So that's mid-month. I try to do sales tax early enough. So everybody, by the 20th, everybody's sales tax is due unless you're in California. Okay. So then that leaves the end of the month. And this is kind of the tidy up time, following up and, pulling the reports and making sure, even though you've done the month end, you want to make sure that the books represent what that they should on the balance sheet. And we'll dive into that. Okay. I don't expect everybody to get that off top, but we'll dive into that and what that looks like. But that's where we verify everything: sales tax, payroll tax, everything that entails your business. And you're making sure that the owners, if you're not the owner, is getting these reports, whatever reports they want to see in addition to the balance sheet and income statement. It shouldn't be year end for them the first time that they're seeing their books. Okay. So these are your monthly checklist. This is what you should be doing. Okay. So now what's different with year end? Okay. I said it's not much different. So after you've done this, like a regular, any other month, we are going to jump into closing out the year. Okay. Usually around this time, you'll probably see it. I don't know exactly the date, but maybe in November, you'll start to see, uh, accounting date alerts in your studio. And that always freaks people out, but it doesn't need to. Okay. Some people wait till after the first of the year when they get back to close out the year. I like to close it out prior to leaving. So it's like any other month. If you don't close it out, it remains open. Okay. And studio can only have 2 years open at a time. So that means everything will probably not date in 2026 if you don't do that. Okay. It'll date everything to 2025 until you do. So before you dive into the year end stuff, I want to make sure you see this part at the top. Okay. You're going to print the balance sheet from the prior year, and I'm going to walk you through that today. You're going to print the balance sheet and income statement, and you're going to compare it with your 2024 tax return for your business or your Schedule C if you're a sole prop. Okay. And you want to make sure that they tie out because you're going to save all that together. If they do not tie out or you are unsure if it ties out, you can simply give it to your CPA and have them confirm, or whoever did your taxes, have them confirm that there were no adjustments, there were no depreciation or reclassing to do. It needs to match that. Okay. I think people miss that a lot. And while we go through these other profit checks and reporting, I'm going to show you how to do that in studio. Okay. But like I said, you can do this, you can use this checklist regardless of whether you're using Studio Designer or not. We're just going to be able to walk through it together on Studio. I want to show you what that year end looks like and what the reports you should be pulling should look like. Okay. So if you have any questions, make sure you're jotting them down because we're going to go over this and have time for Q&A. Okay, so I'm going to move this out of the way and dive right into Studio. Okay, this is Studio Designer, and I'm going to go ahead and pull the balance sheet. So you go over here to the reporting section, and I go into the financials, and I just dive into the balance sheet. And this time we are going to pull the balance sheet from 2024. Okay, and we're not going to include the zeros just because it can be a bigger report if you include everything with the zeros. And I do want to see the sub accounts. Okay, so I want to show you what that looks like. And this is the balance sheet. You can see that I made it cash basis already. Okay, I want to make sure you hear that. Studio is a accrual based software. And what that means is at the end of the year, for those of you that are a sole prop or on cash base, you're on cash basis. So at the end of the year, for tax purposes, you're going to be doing a journal entry to convert them to cash for the sake of tax. Now, some people give them to their CPA in accrual form, and that's fine, but you want to make sure that it is reported in cash basis. Okay. And you know that because watch this. I'm showing all of it, but I'm going to close it. And now I'm going to hide the sub accounts. So I showed them so we can make sure that there's no discrepancy. But when you pull it up again, because there's no discrepancy, it does condense it a little bit and give it you a little bit cleaner of a balance sheet. Okay, so I did confirm that this is correct and ties out to the tax return. So I'm going to move this aside and we're going to pull up the income statement. Okay, and I'm going to pull them up side by side so I can explain some of what you're looking for here. So, okay, this is your income statement. This is your balance sheet. And basically, this both on the same screen. So what I want to show you is you're always going to pull the balance sheet first. You're going to make sure that this all ties out to your December 2024 statement. If they don't, you're going to want to know what the differences are and why they're there. Okay, because you need to make sure that the balance sheet ties out and is accurately tied to the statements before you look at the P&L. Okay, the P&L, profit and loss, income statement, those are all interchangeable words, but the balance sheet and the income statement together make up your financial statements for the business. Now, the balance sheet is cumulative. It does not zero out. It's a running total of the life of your business. This profit and loss, P&L, income statement, this is on a per year basis. It means it's going to zero out in January or whenever your fiscal year starts. So whenever that new period starts, it's going to zero out. You didn't have income, and it ramps up as you earn and spend. So this is what you're reporting for taxes. And this is why it needs to tie out to the tax return. Okay. You want to make sure that that does before you close the period. And now that I have made sure, because we're going to fast forward to 2025, just like we're really in Q4, you're going to want to do this all ahead of time so that you can close the period. Okay. And closing the period isn't a big to do, but what you need to know about that is that once you close the period, changes cannot be made anymore. So that is why it's important to make sure that this ties out. If you close the period and your CPA comes back and says, oh yeah, I had some adjustments that you had to do, you have to contact Studio to have them open up the period for you to do that. Okay. So I want to make sure that that is very clear. Okay. So you want to make sure that you're closing the period when it's the correct time to do so. And I am going to do that here. Okay, so I'm going to go ahead and close this because let's say we confirmed it with the 2024 tax return. And we're going to go over here and you can see right down here, you can't miss it, close the year. Okay, I am going to go ahead and do it early because I know that it ties. And you can see here that it's just going to warn you. Okay, so take heed to the warning because a lot of times people say, oh, I didn't know that it closes it and I can't get back in. You can, but you're going to have to contact Studio. Okay, so I am going to close it now. And I want you to see what that looks like. It's going to warn you. And you can see that it just flashes up here and you can now see that there's a notification. Okay, so it doesn't look like a big thing, but that year is now closed. That means I'm now ready to work in 2026. Well, we are in 2025, but when 2026 rolls around at midnight, it will change in my system as well. Okay. If you need to backdate something, there are still ways to do that. You can backdate in the general ledger or change the system date to do certain things. Okay. But that's a different webinar. So that is what it looks like. And now that we're in the current year, I'm going to take you through and talk about the subledger cleanup for 2025. Okay. Year end and the reports you're going to pull. Okay. So we're going to move on to the subledger cleanup because that is what's next on our list. So I'm going to take you back to reports and you can do legacy reports and pull subledger reports for the accounts that I've mentioned. There's 5 subledger accounts. It's accounts receivable, accounts payable right here, client deposits, vendor deposits, and where's the inventory? Oh, it's right here, inventory. Okay, those are the 5 subledgers that you cannot journal entry out of. That's what makes a lot of accountants crazy, but it's actually brilliant because it's a security measure in place. You don't want your CPA, your bookkeeper, your accountant, or anybody, not me or you, to arbitrarily be able to delete or change things, right? That's why that's in place. So in order to fix a journal entry, you'd have to just move it all to like a suspense account to clear it. Okay. So it's a little more difficult, but I do have other reports that I use. I'm going to go ahead and pull up the subledger accounts, subledger reports now. So this is the accounts receivable. And this is for the current period. And usually what I'm looking for here is there anything to clean up? And you can see here, this Smith one, it was credited. So it was probably a no-go or a return. So those two cancel each other out. So what I would do is apply the credit to the offsetting invoice, and that will go away from this report. But otherwise, I would then say, hey, are these still due? Are we going to collect them? Are we not? Like, it's basically our last chance to kind of see if this is accurate. Okay. And if it's accurate, that's fine. We leave it. Um, it doesn't need to be cleaned up except for that one. Okay. So if I was looking at this, that's what I would do. And then I would, confirm with the owner. Okay. So this is the accounts receivable report that does tie to the balance sheet that I will be pulling up shortly for 2025. Okay. So I'm going to leave that. And then we're going to go to the next one, accounts payable. Whoops. And accounts payable, you can use this report, and I'm going to pull it up because that is the standard report. You can see it gives you all the details for the accounts payable. Well, I have a different report, and I'm happy to share my report parameters with you, but I have this accounts payable report, which I created because I wanted to know the PO number and the client. I think that's kind of important to know when we're looking at these, and we want to verify, are those in fact due and payable to these vendors, or did we pay it and maybe the payment was not married to the PO? I see that happen sometimes. And when someone is behind in creating or building the project in studio, you'll kind of run into these where maybe there is a payment, it's cleared and it's sitting there in suspense, or a generic account waiting to be tied out to the PO. So that's how we would clear that. Okay. But this is the AP report. I'm going to open that up and I'm going to put that aside as well. Okay. These are the details that make up the total on the balance sheet. Okay. So now we're going to go to the vendor deposits. Once again, over here. This is a standard report. Okay. It's going to give you the totals and the vendors that they belong to. And vendor deposits are basically monies we've paid to vendors for items and things on the project that have not yet been invoiced. Okay. I say this in every webinar. Studio does not recognize income or expense until you invoice the client, even if the invoice is zero. Okay. So this is the generic one, but I'm going to pull up my vendor deposit report, because when I'm looking at vendor deposits, I once again want to know the PO and the client ID. Okay. So you can see these are the vendors. It's the same report, same totals, but it's giving me the PO. And this is my accounts payable. So if they are correct, then that is fine. We're just going to confirm, and I'm going to show you what that looks like. Okay. And the last one is inventory. Okay. And there's this inventory report. Whoops. Right here. This should tie out to the inventory. And I use inventory balance. This is the one that I like to use, and it is a little different. See how the total is different. So I always go to this one. This is the most accurate for inventory for me. So it's called inventory balance. So this is everything in inventory. Okay. So what does that mean? I'm going to show you. I'm going to pull up the financials now for 2025, because we're going to mimic as if we were closing out the year now. Okay. So what I'm going to do is pull up the balance sheet for this period. Okay. And you can see here that the accounts receivable, inventory, vendor deposits, and accounts payable, those are the totals that were on each of those subledger reports that I pulled. Okay. And at the end of the year, if you're on an accrual basis, then you just want to review them for accuracy for obvious reasons and address them if they're not. If you're on cash basis, which you are if you're a sole prop, you will want to convert these. Some people don't, but I like to convert the financials to cash basis myself. I want to know that what those numbers are before somebody else does it. So I did work out the numbers for this one, and let me see. So when I convert this over to cash basis, which we are going to do on screen also, I prepped the journal entry. This this net profit of 140,000 actually is 127,000 because of these sub ledgers. Accounts receivable and a cash basis gets backed out, inventory, vendor deposits, and accounts payable and client deposits. Those will all get backed out through the journal entry, but then the journal entry gets reversed on January 1st to be able to work back in accrual for the year. Okay, this is only done once a year. That's why I created a cheat sheet, and I always try to work it out before I actually post the conversion. So I have a cheat sheet that I pre-calculate that total based on those numbers. Okay, so we are going to pull that income statement, and then we're going to go ahead and post the cash basis. Okay, because I wanted you to see what that looked like. Okay, this is the balance sheet. And like I said, when I post this, that's going to go down to 127. Okay, 127K. Okay, so let me pull your income statement. And we're going to just pretend it's December so I can show you. Here we go. Okay, now this is the income statement for the period. Okay, and the only things that are going to change, or you're going to see, there will be totals on the sales income and cost of sales once I post this. That's what's going to make the difference for the cash basis. Okay, I took the liberty of prepping this so I could make sure to show it to you. And this is the journal entry based on the balance sheet that I just showed you. And I am going to date it the 12/31. So, because we're going to mimic this being a year end and converting to cash basis. So I'm going to go ahead and post this. And if that was off, it wouldn't accept it. Okay. It needs to be in balance. Okay. So now when we pull up the balance sheet, you can now see that it has the journal entry with the offsetting. And I like to see it just to make sure that I wasn't off on any of the postings before I go in and hide it for the cleaner version. Okay, so this is now in cash basis. As stated, it's 127 now. And I'm going to pull up the income statement so you see what that looks like. But you can see there's still Amex bank balances are still the same. And these should be tied out to the bank and credit card statement for 12/31. Okay. And if there's a difference, you need to understand what that is. Is there a pending check or something like that? You always want to check that. Okay, so I'm going to pull up the income statement now, just so I can let you see what that looks like with that entry. And there you have it. So you can see that there's sales income and now generic cost of sales, because that is the net of that entry. It does get reversed on January 1st. And there you have it. So these financials now, if everything ties out and we've confirmed everything, they're ready to go to the CPA for tax. Even if they opt to drag it out or push it to the end of the year, we, as a business, don't need to wait that long. I think the earlier that you can have this done, the better, because this is going to prep you for the other things that happen in the year end, right? So these financials are ready to go. One thing I didn't bring up is prepping for the 1099. So what else are we talking about here is we have 1099s, end of the year sales tax. Some are on annual, quarterly, or monthly. Payroll tax, if applicable, that's going to be due for the year as well, or the filing. And you're going to want to make sure that those are really the only things that are left to do. And the 1099s, there are reports in studio. The thing is, if you're not actively setting up each vendor correctly, if you're paying people by cash, or when I say cash, I mean through your checking account too, you're going to want to make sure you get a W-9 from everybody, because it's a lot easier to get it before you've paid them. And it's a lot harder to chase them all down in January. So set up your vendors properly. You can make the 1099 report when you do that. Okay, and I know some of these don't populate for everybody because of that, but okay, I don't have anything to show you on this one, but if we would have a 1099 report, and you can run it from here. Okay, so that is really all that it takes to do the year end. Like I said, it's not super different from your regular month end, with the exception of the things that are annual. Okay, and it's more like we're wrapping it up in a pretty bow and being done with that year. The most important takeaway, though, by having it done early and having it done, with before the tax cutoff or anything like that, is the information that's available as a result of these financials. You should be knowing what your break even point is. I have a video on that if you don't, but those are the things that you're going to want to know, that will allow you to pivot the way you do business. If you're not using these financials to adjust the way you work, then you're not using it to its full capabilities. Like, we want to adjust. Like, do you know the projects that you maybe didn't make the profit that you originally anticipated? Okay, those are important things to discuss and know, even if it's a one man or woman show, right? You want to know these things so we can avoid having costly mistakes going forward. There's a lot to be said about that. The information is just valuable, and I don't think everybody realizes just how much, because I see a lot of people come to me either really close to a tax deadline or like really late. I understand why, but these are the steps that you can take to make it less hectic and less cumbersome. Okay. That's about all I have. I'm ending a little early, but the good news is we can jump into Q&A, and I can get to as many questions as you all have for me, and hopefully be able to show you on screen what some of that looks like as well. So I'm gonna
Awesome.
have Lena take it back.
Yeah, here I am. So I did have one. Well, there's one question in the chat, and it's not necessarily related to this, but it was more about the version of your reporting kind of page. Do you have the new one, or is this your legacy? Because I know the reporting refresh is being rolled out right now.
It is, and I'm always the last to switch over to anything, mostly because I work really fast and I'm just used to it, but also because I take a lot of the calls, and I so I do stick to the old version. You're not going to be able to, but in the top, it gives you an option to say, you know, I need more time or whatever to on the screen. So yes, I am using the old version, but the reports are still searchable.
Yes,
Anybody
they
that
are. Yeah.
yeah, and like I said, if there's a report that you saw that I used that you'd like the report parameters, you can send an email to info@mareevuitton.com and we'll flash that on the screen as well. If any of that is of use to you, I'm happy to send you that the report parameters so you can create it yourself. All of the reports that I use are derived, meaning I start with the original legacy reports. So every single report, I usually hardly ever start from scratch because I'm just lazy, but I cheat. I always will start with these. So if you are looking for the accounts payable report, I am going to start with these, and then I'll send you the screenshot of the report parameters and you can just mimic that in your own.
Okay, great.
If that
I hope
works.
that answers your question, Sally. So I do have one here, and it says I use an outside accountant and not studio designer, but what are the most important?
Uh-oh, I can't hear
Accountant?
you.
Oh,
You cut out.
can you? Oh, sorry. Can you hear me now?
I can't.
Okay, great. So it says I use an outside accountant and not studio designer. What is the most important information or reports to bring them? And then in brackets it says QuickBooks. So I'm thinking that is what they use.
Okay, yeah, no. So I've worked in every software, like I said, mostly bringing people to studio. I'm a QuickBooks Pro advisor too, and I have people on QuickBooks. However, I can't stress enough when you're ready that like studio really is, they don't pay me to say that, it is the best software for this type of business. There's just a lot of security measures in place, and I mean, they've just done their due diligence over a very long period of time. So I feel like everything that is set in studio is a protective measure, right? Like I said, you don't want anybody to arbitrarily be able to delete or change things in your system of any kind. But the most important pieces that you can take, I think, is the balance sheet and the income statement on a QuickBooks, right? I would definitely take it in accrual form if you can. I know QuickBooks has a toggle button as opposed to a journal entry, which doesn't always work, but you want to check that. And the way you know whether something is in cash basis or accrual is if there's AR, AP, client deposit, vendor deposit, any of those accounts, then that means there's a sub ledger to it. So that's accrual. That's automatically your cue that wait, this isn't cash basis. Okay, and I have seen CPAs take a financial that is an accrual form and for a sole prop and keep it that way. That's why I say check it. Make sure that they in fact are putting the right information for your situation, and you know, are they do have the final numbers. So I would say the balance sheet and income statement, oftentimes they'll ask for a general ledger report, and the general ledger report is a really big report in any software, but that will give them that gives them every transaction, even the mistakes or mess ups. That will give them everything for the entire year. So a lot of CPAs like to see that because then they don't need the software. They're just going to kind of do their own thing with that. So definitely those three reports in any situation are the ones that I would share.
Perfect. And I think you touched on this a little bit, but and actually before I jump into that,
Yeah.
everybody, I'm going to be launching a quick poll just to say to see if you'd like to learn more about Studio, if you want to learn more about Mareevuitton, and just let us know if you'd like to hear more while everyone is still kind of here and engaged. So you'll see that poll launching as I jump into this next question.
Nice.
And I think you touched on this a little bit already, Marie, and it was, can you explain the benefits of a cash basis versus accrual business, and what does this change for a business?
Yes. Well, well, first of all, accrual is it's an accounting method, right? And it's the best way to account for this type of business because of the wit, like putting something in process, manufacturing, like construction, anything like that, where we're taking it and we're kind of moving it along a process. And that's how I look at interior design. That is why there's that back piece of it, right? There's always some things going on, because when we're paying vendors and starting things, it's not a done deal, like going to Office Depot and paying for office supplies. You're walking in, you're giving them the money, and that's the cash transaction. We're getting a final good. Well, in this case, we're giving them money to, like, we're collecting money from a client, which is for the project. However, that money that we collect from a client, whether it's a retainer or deposit on goods for the project, that is a client deposit. It is not income. It's not considered income, not not in studio, but not in this type of business, right? We're basically saying, okay, we collected this money. That's why we don't pay sales tax on a client deposit, because we can move it around. It's not final. Okay. We can move it around. So if they have a retainer, like, we don't know if we're going to give that back to them or apply it to something that is sales taxable or something that's not sales taxable. We don't know. That is why studio does not recognize income or expense until we quote unquote invoice the client. You cannot say you owe 9% of blank. That 9% of, I mean, it could be anything, right? That can be good or bad. So that is why it's in accrual form. Okay, it is correct. But what you need to understand is, when you're a sole prop, you don't get to say, I want to accrue, or I want to claim this or that. It's in real time. It's cash basis, meaning when we spend it is when we count it, right? You don't get to dictate that. So there are, I mean, I think I have a whole other video on, like, the invoicing part, because I know that this kind of spins off into many more questions. But cash basis merely just means we're backing out totals that are in those subledger accounts. So the accounts receivable, meaning if we show that we are owed $20,000, I'm going to back that out from the income. The reason why is, when we invoiced the client and said, hey, you owe us 20,000, that counted it as income. But if we didn't collect it, we're backing out the accounts receivable from that income. Does that make sense? And the same way goes for the vendor deposits. Like, we paid them, but it's not an expense, but we do kind of back in and account. That is the back ended journal entry that, like, I did on screen. It never really makes sense a whole lot when people are saying it. It's like a little overwhelming, but that's why I prepped it. All it was taking those subledger accounts and doing the back journal entry. And the reason why I have a cheat sheet is because I don't want to do that every single time somebody wants to know their cash profit for the, like, mid-year, or more frequently. The bigger the company, the more frequent you're going to look at that. So if you don't have a lot going on just yet, quarterly might be okay. But as you grow, you're going to want to be on top of that a little bit more and understand how that all affects your business. But it is the correct way. And if you are a sole prop, you are on cash basis.
Great. Okay, perfect. I've got one more in the Q&A for now. I don't know if anyone else is jumping in there and asking any other questions here, but this one says, can you clarify what you mean by clean up the subledgers? What are we looking to tidy
What are
up?
we like? Well, you're looking for things that maybe, like, if there's an accounts receivable and it's like, I don't know, there's like $300 and it might be from a year ago, I might then say, hey, is this still collectible? Are we going to collect this? And then sometimes you'll find out, oh, you know what? I did collect that. They paid me on Venmo, or she gave me cash and they just forgot to tell you and you didn't catch it because it didn't hit the bank account. So like those odds and ends are little things, or like sometimes like a good one, a good example also is a PO. Like we paid a vendor and let's say they're behind on the projects. It doesn't change the fact that we paid a vendor $2,000. We paid it. I know this and I don't have a PO that matches it. So I throw it in a suspense. That means I have to follow up why these don't have a PO. Sometimes I'll look for it. Other times I'll, show it to them and say, okay, where are these items? Because if we spent the money, that means I'm looking for where we're charging the client for it. That's why I'm looking for it. So it's kind of marrying the payment versus what happened. Or, oh yes, I paid it, but I paid it from my I get the Venmo one a lot. So they might say, you know what, I did. I paid it on my Venmo. Like she paid me on my personal, I moved it to the business, and then I spent that. So I can, all those little odds and ends and things that happen. There's a reason why those POs might still be open. There's a reason why, that uh, accounts receivable or open invoice is still open. Maybe it's not. So it's easy to kind of keep moving month to month and have an accumulation of little things. So I don't think it's something that needs to be done every single month unless you're really busy. If you're really busy, like I said, I don't think you want to wait extended
Clean up a whole
gaps,
lot.
right?
Mhm.
Yeah, it happens a lot.
Mhm. Okay, that was actually going to be part of my question, is how often should we be looking, and sorry, an extenuate of this question was how often should you be looking into your sub ledgers based on how you said that. So just I guess
Definitely
it's just how busy you are.
I
Quarterly.
think
Mhm.
quarterly is decent. I know that that's easier said than done, and sometimes it doesn't happen. But I'd say almost everybody I deal with is at least semi-annual. I even send them a reminder like, hey, it's we're at the halfway point. Like we should be looking at this, because what if you don't, your year end is going to be a cumbersome cleanup, because it's inevitable to have that happen. There is
Mhm.
cleanup, even just the odds and ends. I thought I cleaned with that invoicing. That wasn't left there for the sake of the webinar. I just missed those. Okay. So
Cool.
it's those things, like marrying like you saw how that invoice had a matching credit. It just wasn't applied to each other. That is also a cleanup. So those that's what sub ledger cleanup looks like. And for the sake of inventory sub ledger cleanup is now going, okay, I show we have all these things in our inventory or our shed or wherever they are. Is that in fact true? And a lot of times come year end, when we go and look at it, they might say, oh, you know what? I took that one. That one's in my garage now. So that is now personal use. So I'm going to sell off that inventory or cost it off at cost to our office. If it's damaged and we no longer have that, or sometimes it's just lost. Like I thought we had that and I can't seem to find it. It's going to sit in your inventory until you address it. It's just going to live there indefinitely until you address it. So, if I've seen people not clean it up for years at a time, and then there's a lot of cleanup to do, or
And then
they
you have to
forgot
remember
to.
where it all went.
Well, if you forget to quote unquote invoice the client, because this is another mistake that I see happen a lot. What do you mean invoice the client? They don't owe us money. We collect 100% on proposal. We pay our vendors 100% to put it in production. What do you mean invoice? Well, nobody owes anybody money. We don't owe vendor money. Clients don't owe us money. But if you just made all the items in the project inactive and didn't invoice that, those are going to sit in client and vendor deposits till you catch it. And I have seen somebody forget to invoice a multi-million-dollar project a year later.
That it
And
sits there.
well,
Mhm.
yeah, no, they're like, oh, that sales tax. So then I'm like, okay, how are you going to do this? And I think they ended up invoicing it in several parts because of the sales
The
tax
year
liability.
end. Yeah, of course. Yeah,
Mhm.
it starts
So do
soon. So
not
sub
forget to do
ledger
that.
cleanup.
Sub-ledger cleanup is so important.
Yeah.
And I
Mhm.
also have content on project closeout. Project closeout is something that should happen on all of your projects prior to giving any retainer refund or anything. Like when you know you're doing the last bill and you're trying to make sure everything is in line with this project. Don't forget to invoice. Like I have a process for that, but you don't want to forget to invoice even if it's zero, because that's when it will recognize sales tax. It will sit in client deposit, vendor deposit until you invoice. Then when you invoice the client deposits become income. The vendor deposits go to cost of sales, and the amount attributable to sales tax goes in the sales tax bucket.
Awesome.
So, yeah.
So we have a few minutes left. So I was thinking, looking ahead to 2026, what
Yes.
are some of those key financial metrics or habits we should have in any of our accounting programs? And I
Tell you.
mean, sub-ledger cleanup is one of them. I know that now.
Mhm.
What are other ones?
Well, I would say definitely if looking back at the P&L for prior years, right? If I have, let's just say they've been in business for a while, if I know I can look at the last 3 years, I might do five, but I usually look at the last 3 years because then I know if there was a spike or a drop, or are they very consistent? Like a little, some people just kind of chug along right about like a little bit of growth, which is good, right? So I like to look at that because I always like to have something to measure to, even if I don't know their full history or know what's going on. When I take somebody on, I'm looking at are we in line with what we've done in the past? Okay, because more than likely they are, and they're going to continue in that same trend unless we use this financial information to adjust. And when I say adjust, I mean, are you looking and saying all those decent subscriptions are in fact correct? I'm not paying for two Adobe or whatever. Or sometimes I even see where they're like, oh, I'm paying for another account. Like they just don't know. Or sometimes it's iTunes. iTunes is one that's super generic and can be anything. Well, it's just a good time, even if you're not looking at it every month. Year end is time to kind of drill down and look at what we're dealing with. And that's also how I determine, like, how do you guys determine what your markup is going to be on your items? Like, do you just kind of go with what's trending? I mean, because I know a lot of people that don't change their rates or markups for decades. And I mean, you kind of have to at some point, but what makes you adjust it and what makes you come up with the number that you do? And that question puzzles people because I think they just ask around. But I take the financial and I look at the overhead and I go, okay, if the overhead is this much per month, like if we know we spend 50,000, what's that break to per month? Okay, then am I making sure that my XYZ amount of projects absorb that cost for me? How do I make sure? Otherwise, it's just paying for the projects and giving me a little bit, but the business should be self-supported, or that's a goal, right? Because anything that's not supported is going to come out of your pocket. So definitely looking at adjusting the way you do business based on the financials at hand. And I think that's the piece that a lot of people don't kind of do. We're all thinking that we just got to get this done for tax. We just got to get this done for tax. Okay, it's the next year, but there's not really a definitive cutoff. And I think that makes a difference.
Awesome. And I hope you can still hear me because my mic just switched to my webcam instead. But I want to say thank you, Marie, for such an insightful and practical session. I
Thank you.
think that there is a lot of really important information that people could easily pull from this, and everybody loves the handout. So you will be getting that
Yes.
with the follow-up email as well from with
Awesome.
the along with the recording.
And
Thank you to everyone who joined us today as well.
I just want to say thank you to you as well. Thank you, Helena. I think you don't get enough credit for being behind the scenes, but I can't do any of this without you. So again, thank you. Thank you to Studio Designer, my Doma, and all of you for taking time out of your busy schedule. I know it's not easy to jump on these, and sometimes we dread it, but hopefully it was insightful. Take the handout. It has everything. If there's anything that you wanted that isn't in the handout, simply email me and I'm happy to get that to you. And we'll see what 2026 has in store for us all.
I love it. So we are here at Studio Designer and our sister platform, MyDoma, like Marie said, to partner with industry experts to bring educational webinars, in-person events, and tools that help you manage your business with confidence. So from tracking orders and reconciling payments to analyzing profitability, Studio Designer is here to simplify your workflow and give you clarity so you can start 2026 strong. So on behalf of our team, thank you again for joining us, and we can't wait to see you at our next Work of Design Live.
Thank you.